Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's take a look again on the gold market. So as you can see, in general the sentiment on the market has changed very significantly in recent couple of days. Actual preparation has started even earlier to this, starting with this upward direction here. But very significant numbers we've got on the CPI, which as we said now becomes the cornerstone. The inflation currently is very important and decisive economic factor that actually determines the policy of the central banks, the Fed reaction, and so on. So currently everything stands around it. And this gold shows corresponding reaction on the numbers that have exceeded the expectations. So yesterday, in the longer term, we suggest that upward direction probably should continue. It's because we see fast acceleration right here to the OP. And every time when the market shows this upside momentum, even if it hits some resistance, usually after some respect, technical normal reaction on the target, on the resistance, it should keep going higher. At least that is suggested by the probabilities. Also take a look how market responds to this area. So market hits the OP through 1870. We do not have any significant fib levels from this area. And the market strongly overbought, but we do not see any significant pullback. Even minor pullback hasn't started. So yesterday we discussed that maybe minor pullback, minor ABC retracement, some catalyst triple to buy will be formed, but market even hasn't formed this pattern. So still, as market stands here, we could keep an eye on possible patterns that might be formed there. But currently, it seems so that market could keep going right from there. So upward action could start after price just will abandon the overbought condition, and then it could just keep going higher. This is because what we have on hourly chart. Let's take a look what we have here. This is clear triangle is forming, and usually when triangle forms after the hitting of some target, OP in particular, or if it stands right under some significant resistance, the market starts to take in the shape of the triangle. This is the continuation pattern. It means that market is building an energy for possible direct upward breakout, or maybe some larger pattern will be formed, but anyway, the breakout first step should be to the upside. At the same time, we also see on the hourly chart some signs of the bullish dynamic pressure. So trend stands bearish, but price action is not. So from that standpoint, as you can see, we do not have any clear patterns that could point on a possible deeper retracement. We do not have any bearish patterns here, but we have the triangle that suggests that maybe we will get straightforward upward action. Still, on the follow time frame chart, we have great thrust up right here, which is also actually visible on daily chart. It's nice performance with the moving average as well. On the daily chart, you could see that we also have not bad thrust, but we have a bit smaller number of candles that demanded by the Jordan approaches 1, 2, 3, 4, 5, 6, and 7. Jordan requires at least 8 bars in a row of the thrusting action. But anyway, it doesn't mean that it can't work as a good momentum trade, especially if we have nice overall sentiment around the current price behavior. So what I would like to say is that based on the pattern that we have here, it seems that market has more chance to show the breakout right from the triangle. But if triangle still will be broken down, we could consider possible, for example, bread and butter trade or something of that sort if market will reach an area between the 1825 and 1830. This will be a nice area to consider taking the long position as well. From that standpoint, you could act differently. So for instance, if you would like to possess yourself with a triangle, you do not need to play too far stop. So it will be enough to hide it somewhere below the lows of triangle, or just below the trend line. If you have enough assets on your account, and you could use the combined approach. For instance, you could take some part of the position inside of triangle, but place initial stop somewhere below this area. And if somehow market still will show deep retracement forming some brand body trade or something right to the 1825, you could add the bulk of your position right here. And in this case, well, your average will be slightly above this area. So in general, it will be acceptable for a position taken to the upside. This is most common approach and most, well, simple, I would say. So you do not trying to catch and gamble on what retracement will be, what the patterns will be formed. So you could just be prepared that pullback will be somewhere to this area, protect yourself with the stop, and then act with the different patterns that might be formed there. Oppositely to this scenario, you could try to catch particular scenarios, as I said, either with a triangle, or you could just do nothing, sit on the hands and wait for a pullback, because in general, chances exist on this pullback. They are not really small. This market stands at the overbought and the OP. So more or less, at least the 30% pullback has not bad chance to happen. So that's a few ways how we could act here. We're not considering currently the bearish positions on the daily chart. So this is understandable. But still, if you trade on the very short-term trade on time frames, on the hourly, for instance, on the 5-minute chart, and if some bearish pattern will be formed here, you could also try to make some scalp bearish trade. This is not forbidden, but it just doesn't correspond to the time frames that we're working at. So because we are mostly dealing with the daily chart. So this is our current view on the gold market.